end of that music means we are ready for another episode of the Halftime Report, your show where we come and bring the news, work through all the financial media nonsense that we see, try to break it down, give you the important stuff at mid-trading day. I'm hosting today, my brother Tim. My number of brothers that have duplicated in the state of Washington went from one. It's now there's an expansion.
It's up 100%.
It
is,
100% gain.
And so my brother Tim is visiting my brother Matt in Washington, and so he is on an unfamiliar laptop, which leaves me the hosting duties today and this week. So I will bring my pleasantries each and every day. But let's start with pleasantries. Tim, how do you find the state of Washington?
Well, first of all, just took a weekend road trip, where we drove through Idaho and through Oregon, and then we now are here in Washington. We're up here visiting Matt and family and all that kind of stuff, hit the beaches, do some hiking, get some great food. Really looking forward to the week, quite frankly. Had a really great night last night just playing games with the family. But the trip and road tripping in the summer is one of my favorite things in life. Getting up over the open road, playing card games with the kids, turning some music on, get the satellite radio going, listening to some talk radio when the kids are napping. That's when you can sneak it in, Matt. You know that as a father as well. Get the sports radio going when the kids are finally falling asleep. But I love it here, man. It's really peaceful right now. We got an overcast sky and it's not 150 degrees like I left Salt Lake City. So looking forward to a great week up here, and I'm looking forward to great show here today to start the week, though, talking markets with you, Mark. But I'm enjoying it so far.
Is Tim enjoying it as much as he says he is?
He lost a few games of Avalon last night, but no. Of course, he's enjoying it. Tim, when you were talking, it kept reminding me of Dad. If he only had AirPods back in the day, it would have changed his life. But unfortunately, he didn't. Mark, I'm doing good. I'm excited to be here. And yes, we're going to be taking off the rest of this week, but glad to be here today. Mark, I'm not doing better than anything bad. But I just wish I was doing as good as, say, old Richard Branson going into outer space this weekend and then cashing in on $500 million in sold stock here today. So not doing as good as that, but I'm close, bro.
Listen, I'm heading to 7-Eleven later today, and I will be issuing new shares on my return trip. So
listen, I just expect any announcement in any capacity, new share announcements.
New share announcement if something cool happens. And Gino, you're joining us on Monday to talk about sectors like you always do. How you doing out there in Cali? I got a bunch of West Coasters with me today.
Yes, you do. Yes, you do.
Beautiful thing.
Yeah, it's nice out here on the West Coast in the summer, man. Always nice, fact, year round, but it is tour season. Beaches are beautiful. I'm enjoying it.
And all right, I'm gonna end it there before he starts talking gas prices.
It will happen.
We've solved it, Mark. We solved it. Everybody here is doing electric bikes now. Everybody's doing electric bikes, and now we're shutting down the power grid.
All right, let's drop into the let's get into the broad markets. Listen, we had a one-day volatility apparently. That's what downtrends are these days, is you get one down day on Thursday. Market responded strong on Friday. We have some continuation. What are you seeing from a technical perspective, Matt?
Well, technically speaking, and we talked about this on Friday, the fire back V-shaped type recovery, you saw it there on the intraday analysis. Really kind of whenever you're looking at potential bottoms, and the one-day bear market jokes, I think we're going to say a few of those in the future. I think that might become a thing as buy the dip becomes a reality for all of us. But when you're looking at this, every time you see a shift in character on the bottom of a chart, I'm always looking at potential reversal characteristics first. And I don't care if you're looking at a 5-minute chart following an economic event, or if you're looking at, a major market crisis and the market's been down for a year and a half and you're looking at reversal characteristics on a weekly chart. Regardless of what the time frame is, I'm always looking for the same type of characteristics, and that's for support to really start building, and then eventually to see increases in that support, and then ultimately to start to see consistency build in the intraday analysis. And so when you're looking at this type of drop in price we saw last Thursday night coming into the cash open on Friday, you really had that nice little double bottom you saw here at 42.80. You broke out of that W formation right there at 4,300. It starts establishing a little bit of bullish momentum. And then I do think the key in the intraday analysis to kind of solidify the price action happens before the market open on Friday. This is all kind of coming into Thursday. Here's your nice little bounce you got on Friday. You came right into that 4,300 zone. Yeah, I know it dipped under. We're talking intraday analysis here. It then kissed off that 4,300 old resistance, new support, and then look at that market just kind of form the consistency. And so when you're looking at a marketplace that snaps back, recovers, and then engulfs the previous day, I do think you got to say that is a positive, and then you see the follow through coming through the weekend. Markets are, they can be volatile underneath the market, but right now the top of the market is breaking out of an all-time high. You got some positive momentum on the intraday analysis, and there's not a lot that's looking to really kind of stop the price appreciation from at least testing that 4,400 zone this week.
Tim, anything to add?
Just a nice, healthy, bullish market as we're getting in front of earnings season. We'll be talking earnings through the week, I'm sure, with the coaches. A lot of companies that are going to be reporting. Big banks, Taiwan Semiconductor reports, PepsiCo, but just a healthy market as we're fading through the summer. Hitting into new all-time highs on the S&P. And like Matt echoed here, I mean, this is a good, healthy chart from multiple time frames on that perspective.
And you're not seeing any overperformance in the NASDAQ today, but we obviously have had that strong rotation into tech recently. I mean, what do you do? I mean, Matt, do you have anything to add from a technical perspective here? Because that is a really strong short-term trend.
No, when you're looking at the other indexes, I got a fairly similar read. Obviously, the NASDAQ, I think you got to put as 1A, right? I do think the S&P that's been battling with the Dow for, that second type of spot, I would put the S&P as that second spot. But when you're looking at the momentum, well, let me first start with pattern. When you look at pattern, you got this as a high base. That's what you have it as. You got the 9 EMA catching up, and you're fighting on a potential breakout of the, which has been confirmed to be the wick at the top end of the range. That's what you're looking at on the NASDAQ. The pattern on the S&P, you're looking at a little bit of a very similar pattern, a little bit more volatility in the S&P, but a very similar pattern. Not similar momentum recently, though. NASDAQ has better short-term trend momentum than the S&P does. But they're close. They're close. That's why I have the NASDAQ as the leader. Once again, you have better consistency. You ride that lightning. You see it ride the lightning of the 9 EMA. Very consistent. You see the high base. Confirmation on the wick. Very consistent like that. You look at the S&P coming back here. Again, it's not that you don't like it. You do. It's just a little bit more volatile, and it has not been as consistent in its trend. So you have a little bit more momentum and consistency in the NASDAQ, but the patterns are fairly similar. When you do look at the Dow Jones here, you obviously got a different perspective, and you're looking at a potential. Well, not a potential. You are looking at some degree of neutrality in the intermediate type trends. Once you got up above the moving averages here, remember that right shoulder breakout from a couple weeks ago, whenever you get above those moving averages, you do have to have, in my opinion, a short-term bullish bias to the whether it's a stock sector or whether it's an index. Now you're looking at this as a potential breakout. And the Dow has been kind of caught up a little bit in that sector rotation argument that we've been having just to a certain degree over the last few weeks. But it's starting to kind of separate itself from energy and materials a little bit. And you're looking at it from a Dow perspective saying, okay, can we break out of this short-term resistance zone of 34,775? And then ultimately, can we break out of that 35,000 zone, which, we have that debate on wicks and candles all the time. I think 35,000 is a wick you got to concern yourself with. And I know it's only one data point, but it's a very important data point given the fact that it dimed it at 35,000. Like not even a cent. It ticked at 35,000. So I do think you have to be concerned about that. But the positive thing about the Dow here, and what I'm a little bit excited about here, and I want to get you guys' take on it.
Stay there
when,
for 1 sec if you can, if you don't mind. I have a
my
question about the
my question
35,000.
is pertaining to the Dow, but yes, go ahead.
Finish your thought. I have a question about the wick you just mentioned because I do think there's an interesting thought there, and I want to run
Let's
with
go there. Let's go there then, Tim, because then that would change the subject on the other one. So go ahead.
Well, you mentioned that the wick does matter here, and this is something you've talked about technically many, many different times. Where
Yeah.
you look at the wick, you look at the body, you look at the wick, you look at the body. Here, the wick is only within what, a third of an ATR away. So, like when you're looking at wick versus body analysis, does it ever come into your thinking, like if that wick was up at 35.5, you might not care about the wick, you'd probably play off the body, right? But the fact that it's not that far away, as well as a key round number, is that why you're saying the wick is where the trigger is?
Well, I'm saying the wick where it triggers because it happened in combination of an overall zone of resistance. Because when you're thinking about the zone of resistance, and again, this is subjective, but everybody's got to kind of put it in their own subjective analysis at times with technicals. I see the zone of resistance kind of as, up until I get a feel of confirmation, I feel it's one ATR zones, right? So when I say the word 30, or when I say a number of 35,000, for me, what that represents is about a zone of one ATR. And so when you're looking at an ATR, and I believe the ATR at this point is 350, right?
Sure.
So when you're looking at a zone of a $35,000 index, that zone is going to represent about 350 basis points against the index, which is about 1%. That's about a one daily type movement in the NASDAQ, or excuse me, in the Dow Jones right now. And so you would be looking at that as like 175 points above 35,000 and 175 points underneath 35,000, ultimately for confirmation, right? And so even though it would get above 35,000, I would still, in the back of my mind, again, subjective thoughts here, think, well, we know we're still in that zone of confirmation. You know what I mean?
Sure.
So give me that one more day. Give me that one more day of price appreciation to show me that the bulls truly are breaking out here and that they truly are, feeling like this could leg up. And specifically in the Dow, when you're looking at the amount of time frame that the Dow has taken off, you're now talking about 2.5, 3 months here, guys.
Yeah.
This is a consolidation neutral type range here. And so when we're talking about a potential breakout, you're at this point, you're talking multiple time frames and legs up, given the fact that you've taken off 3 months of time here. And so when you're looking at that ultimate confirmation, I don't think it's a bad thing to say, ultimately, let me see another day above 35,000. What I'm saying, or to answer the question, Tim, is when you have that wick ding the dot at 35,000, that's not a person that did that. That's an algorithm that did that. And so I'm willing to bet there's other algorithms programmed above 35,000, which means once I got confirmation on where the upper end of the range is, 35,000 at this point, that's where I put the breakout, the ultimate confirmation of the breakout. If I didn't feel it was confirmed at the top level of the zone, I would still say it's that 1/2 ATR above. But because I feel 35,000 is such an important number for the marketplace, ultimately I feel confirmation is above 35,000. Does that answer your question?
100%. Appreciate you going into that.
All right, and my question heading into the week for the Dow, small caps, a lot of elements of the reflation trade, is we got the CPI report and the PPI report. CPI report tomorrow, the PPI report the next day. Inflation seems to have taken a couple weeks off from the market caring about inflation, right? Yields going down. Nobody's talking about inflation. Is there anything that could spark, if those data numbers come in hot, spark the reflation trade short term?
I don't think there's a data point that would change the Fed's thinking going into Jackson Hole in August. I think we're too tight against what could be major announcements out of the central bank. Now, don't get me wrong. as market participants, we might overreact. But I feel that overreaction would be very short term, given the fact that the Fed would come in and say these are just short term data points, and we're still data hunting. We still have these amount of economic reports before the August Jackson Hole event. So, no, I honestly, I'm not sure there's one data point that could happen at any point in the next 5-6 weeks that would change the Fed thinking going into Jackson Hole. I think Jackson Hole's speech has already been written.
Well, this is where Tim excels. He would have something pithy to say here.
Pithy.
You'd have something pithy to say here.
Word of the day.
Well,
listen. Well, one thing that the storyline hasn't been written on is small caps. That's a terrible transition, but that's why Tim's a pro.
No, that was a decent transition.
And Matt, tell me,
you took my quirky comment towards the Fed and used it to roll into the Russell 2000. I
was doing my best, Tim Justice. Listen, I got a few small caps. They rallied on Friday after selling off for about a week. Matt, give me some hope for my small caps here. I got a few plays in
cash flow condors should keep on paying out. That's your hope.
Well, I'm cash flowing. Well, I wake up in the morning. You guys have
point
coffee.
Is,
I cash flow, but
yeah. My point is, you're in the middle of a wide range within the Russell 2000. The Russell 2000. Anybody that's been around this market for any amount of time knows the Russell 2000 can go take a nap, and it is taking a nap. When it wants to rock and roll, it rocks and rolls. When it wants to take a nap, it does that, and it can sleep a heck of a lot longer than you can.
I don't know. I'm pretty tired. This whole stroll is draining.
This gives me so much joy.
He hates it so much.
You have no idea how much joy this is giving me right now.
Oh my goodness, I'm laughing.
If you want hope on the Russell, I just want to make one point on the Russell. You asked a question. Give yourself a 20-year weekly chart. Small caps will grow eventually. They can take years off. They can take years off where they're neutral, consolidating, all that kind of stuff. I wouldn't worry too much about the potential for small cap companies to kick another leg up if we get a breakout.
PSA. Look at a 20-year chart on any stock market in the U.S. and you will use it as your savings account.
There you go.
Permabull for life. Before we transition into sectors, because that's where some of the real story is. I talked about this on the Sunday night prep class last night. It's like individuals that have been on top of rotation. We'll talk that in a second. Have done well, but we'll talk about that more in a second. Like big week ahead of events. We got CPI and PPI, and Jay Powell's gonna give another speech. We got earnings season. Anything you're looking for? I mean, any thoughts about, because it's been a boring stretch and we got a lot going on this week, Any thoughts on any of the big events?
I'll go first. On the economic calendar, I don't really care what Powell has to say. Obviously, it can always be a mover whenever the Fed chair is going to speak to anybody. And I believe he's in front of some other subcommittee this week in the House, obviously going to do it via Zoom like he has been in the past. I don't really gonna get checked in on that unless something happens. I'm with Matt that I think everything is waiting on Jackson Hole from the Fed until we get there. It's going to be kind of a non-story, on Fed speak and all the type of stuff. PPI data on Wednesday, anything to do with inflationary data. CPI data on Tuesday. I mean, inflation data does matter, and those are numbers I'm going to watch. But I think the whole week is really around earnings season, quite frankly, and not just earnings themselves, because I fully expect, and I can't wait to talk to Matt about this on the golf course through the week. We're going to play a little bit of golf this week. I fully expect banks to do real well on earnings. I mean, another quarter of, pretty stable prices and all that kind of stuff. I know interest rates did drop a little bit. That might hurt some of the lending banks a little bit. But guys, we just announced the Fed stress test had passed, and buyback programs and dividends and all this kind of stuff. I think you can see a lot of those headlines. Now, that doesn't necessarily mean price response is going to be bullish. It's very possible we come in line with expectations and have a lot of positive things to say, but price doesn't necessarily start running on that. So I'm watching bank earnings this week, Mark, to answer your question. That is the one thing I'm going to be interested from the marketplace to see what happens.
Yeah, and I certainly agree with what Tim has to say. Just let me add on to it a little bit. When you're looking at the economic calendar this week, you have a ton of economic news this week. PPI report, CPI report, retail sales data. You got Chairman Powell giving a nice little testimony that we could all basically give verbatim at this point in the game. But I'm looking at from an economic perspective. Obviously, we're going to be talking about the inflationary data this week. But just a curious data point is retail sales for me this week. Took a little bit of a dip last month. Do we have a revision back upwards, and does the retail consumer come back up a little bit? So I am looking at that data point from an economic calendar perspective. But I do think the news of this week will be centered around the earnings reports, and obviously the banks, with J.P. Morgan, as well as Bank of America, Wells Fargo, Morgan Stanley, Citibank, BlackRock. You have a lot of those major banks, and Coach Tim's absolutely on point there when he's talking about not just their raw numbers. For me, right, we're going to be reporting on the raw numbers this week, but also the Fed releasing, the banks from not allowing them to put out additional stock buyback programs or release more dividend, taking that, bringing that back to the market following the banks passing the stress test from a few weeks ago. Will they be announcing that this week with their recent earnings? And so I am looking forward to that. One particular stock that does interest me quite a bit this week, and I think interests quite a bit of people at Tackle Trading, is Taiwan Semiconductor. Taiwan Semiconductor, we talked a little bit about last week. It's been held back against a little bit of the SOX out there. The SOX index has recently broke out of a neutral range, increasing its support level. Taiwan Semiconductor, which has been such a leader to the semiconductors over the last few years, has been held back over the last 6-7 months. And we've talked about in recent reports the potential of a breakout, coupling that with a positive earnings announcement. That does get me a little bit excited. And yeah, technically, I love what I'm seeing here. And if I didn't have that nice little blue and red combination icon, I'd be like, breakout, look out, right? Look for it to run here. Great company, great fundamental company, a leader in its space, has earnings this week. Technically, you're in a position where positive earnings could result in something good. So I think Taiwan's on the radar of a lot of market participants this week.
This thing is so on my radar. Like, when I go through my weekend checklist and I look for things, this thing is so beautiful on a monthly chart. It like literally makes me trader geek out. Like,
monthly chart. Weekly. I mean, look. Yeah, I'm with you.
It then lines up, weekly and daily and setup. I mean, this is one of those bad boys that, as a cash flow trader, post earnings, if I get the right setup, I'll be going for price appreciation over just cash flow. I mean, you look, just living on the 9 set up.
Look at that monthly. That's a flag on the monthly. It
is lining up on multiple time frames. Of course, it would do that.
The right shoulder breakout on the weekly.
I know. Like,
hold on.
I geeked out.
I'll show. I know this is silly micro analysts and all that, but all those time frames look good. And the number one thing I like is that ascending triangle.
No, I mean, there is so many things for so many traders
it's
to like
a good
here.
Technical pattern.
And it's happening on a good company. If you can get the right sweet spot pattern on earnings, post earnings, this is going to be on a lot of traders' radars.
And we don't chase, right? We don't chase. We don't gamble in front of earnings, and we don't chase momentum after. What we'd like to do is we'd like to see what that secondary setup is. And we've talked about how economic reports there was a fantastic trade for years and years and years called the news-based trade, and you would love to trade news-based trades in the Forex market until you couldn't. And you couldn't because algorithms took hold of every economic report and drove the volatility so much that the bid-ask spread widened so aggressively that you couldn't make the trade and be profitable. And so you had to adjust, and what you would have to adjust to is you would adjust to the secondary technical setup that would establish after the volatility subsided. And I kind of see the same things with earnings here where you don't want to necessarily chase in front. It's a beautiful technical pattern, and I love the stock, but you never want to chase even the most beautiful things before a volatility event. And so even on the volatility event, I think you got to look at the analysis and say, okay, even on a gap up, let's look at the behaviors after that gap up. Are we going to see a flag? Are we going to see a base? Are we going to see a retrace? We got to wait to see that secondary technical setup, and that's the one I'm really excited about because of the multiple time frame potential that Taiwan Semiconductor has. It all starts with earnings, though. It all starts with earnings this week, and so again, just asking the question, there's a lot on the docket this week, right? A ton of earnings, but you also have a ton of economic reports. You have the chairman giving testimony. But for me, I'm looking at Taiwan.
Yeah, there's a lot there. Gino, listen, we bring you on Thursday. You do the newsletter every weekend, and I love it. I know Gino well. I know my brothers well. I love it when they become passionate about something, and Gino is passionate about that newsletter, trying to make it as good as it can be. And one of the things, Gino, you do on that is break down the sectors. What are you seeing from a sector analysis? Because it's a big thing at Tackle Trading, top-down analysis, identifying that rotation, and not to pat ourselves on the collective back. We've done a good job on identifying rotation in the last year. What are you seeing from a sector relative strength weakness standpoint, Gino?
Well, funny to say that is that we've said many times already is the financial sector is what we're looking at because of the earnings coming out Tuesday and Wednesday from the big bank names, tomorrow, JP Morgan, Goldman Sachs, but also Wednesday, Wells Fargo, Bank of America, Citigroup, BlackRock, PNC, some big names. They're going to move that sector. What we're looking at is not the earnings report. We expect growth there. We're looking at the outlook. The outlook, that's what it's always about on earnings. And that'll set the tone. With that said, Mark, you're looking at the financial sector like you are there. That's a great setup. I mean, if it wasn't for earnings week, I would be scanning through this sector looking for picks because that's a good setup right there. You got a trend reversal setup, a W pattern. I actually, technically wise, love that setup. I mean, if I had to pick something in that sector, I would just trade the XLF. I mean, you're not exposed to earnings reports. You're not exposed to volatility. You're diversified. But other than that, yeah, like Matt said, we don't chase things with weight. We're patient. Looking at the moving average, a major break right there. It's funny that this is what happens on charts when there's big news coming. It likes to settle down near a support or resistance. It likes to find a pullback spot like before an FOMC meeting. And that's your trigger right above there. What's interesting is if the outlook is really good and there's some positive fuel to this sector here, because this is the best performing today on my list. As far as sector performance on the major sectors, it's up over 1%. And looking at this sector here, you have to wait. Could this rally up? There's a nice resistance there at 38.60, and that wouldn't be too bad of a move. Nothing huge, but definitely play with caution in that sector. So the one sector that we did say we're going to shy away from on our report this week is the number one sector going into Monday. Don't let it tempt you, But that's financials.
Did we get any big upgrades, downgrades in sectors on the newsletter this weekend?
So, Mark, very little change from last week. The strength is in the growth still. Just like, the Dow and S&P and NASDAQ lead, especially the NASDAQ. The NASDAQ 100 is really leading. And like Tim said, what's going on with Russell? I put in the newsletter there that if you get a chance to look, I don't want to go back to markets, but the Russell 2000 is lagging, but it is still the highest return so far of the year. But if you break it down to the Russell 1000 and 3000, the Russell 1000 value declined, but the Russell 1000 growth increased. So really it's in the growth. So when you break down the Russell, it's easy to find, okay, what part of the small caps is doing good or bad? It's in growth. And with that said, that's still our leading sectors: technology, discretionary, and communications. They're leading the market. That's what we have on the gridiron. They are holding up the market. And by the way, they are the biggest market cap of the market.
And Gino stepped away. While he stepped away, Matt, I mean, you're seeing some follow through on discretionary there today.
Well, let me kind of pick up on that, the growth conversation Gina was having very quickly. And the point he was making on the Russell 2000 is a very important point. The Russell 2000 is broken up into growth and value, right? You have, like every index is, but it has 1,000 growth stocks. It has the Russell 1000, which would be the value stocks as well. And growth has, starting to take over the course of the last 5 to 6 weeks, and you can certainly see that in the price performance in technology. You can certainly see that in the consistency of the price and trend performance in communications, and then you can certainly see that in the aggressive response following the right shoulder breakout of the 50-day moving average in the discretionary space. And at technical trading, when we see those technical breakouts, you're going to start to see upgrades over time. As the trend starts getting more consistent, you're going to see upgrades over time. And over the course of the last few weeks, you've seen technology and discretionary communications see upgrades. Whereas, with what you've been seeing a little bit in the cyclical areas of the market, energy has seen some relative weakness in trend and pattern. It's seen violations of support. You've seen downgrades there. When you're talking about materials, same type of conversation. You have double tops. You have violations of support. Now you're looking at recovery analysis. And so in the cyclical areas of the market, you have seen some weakness in trends and patterns, and then specifically in finance and industrials. What I was going to talk about when I was looking at the Dow before we started looking at the wick conversation on the Dow futures chart is you're starting to see a little bit of separation from a sector performance in your cyclicals. And this has not been the case for the first 8-9 months of the year, or excuse me, 6-7 months of the year. These areas of the market, the cyclical areas of the market, were fairly consistent. One might outperform the other, one might underperform the other, but you never really saw a significant change in theme. You never really saw a significant change in price performance. Cyclicals would run together. Non-cyclicals would run together. Well, you are seeing a little bit of separation from an energy, specifically the violation of the short-term moving averages and the violation of short-term support, and basic materials, which is still in the recovery analysis following the failure of support or the failure of the theme and the support in, I believe it was mid-June now, so about a month ago. And so you are seeing a little bit of separation coming into earnings week with the financial space and specifically with the industrial space. And so when you're looking at the cyclical areas, the growth areas are all fairly consistent with one another. They're kind of running on the same theme. But when you're looking at those cyclicals, they are separating themselves, with industrials and finance kind of taking a little bit of the charge. Now, finance for us specifically did get a downgrade this week, and they did get a downgrade fairly significantly. But one thing to keep in mind there, that it wasn't just the price response last week that we downgraded for. Obviously, when you're in front of a major earnings week and you're looking at some degree of short-term neutrality, we wanted to represent that. And so the financial sector did get a downgrade into that 40 spot. Looking at that from an earnings week perspective, if we do, and this isn't if, we're starting the week and we haven't even seen earnings coming out at the banks yet, and we are seeing a little bit of front-running behavior, like somebody knows something right now in front of those bank earnings, but we haven't seen it yet. You recover this week, you on the backs of some positive earnings announcements out of the banks, couple that with some positive dividend and stock buybacks that a lot of people in the market anticipate, you're most likely going to see a significant upgrade in the financial space, but we got to see it first. Industrials just kind of sitting back, hanging out, at that positive 30 level, no upgrades, downgrades there. Energy also did get a downgrade, but that downgrade was due specifically to the violation of the 50-day moving average last week, forming a little bit of short-term bear flag pattern here. Energy's got some work to do to get back into some degree of bullish mentality. And then you finally got the third categorization of sectors would be those more defensive areas of the market, and a couple to keep your radar on here. Real estate just pumping it, just on fire the last few days. And you look at the momentum in the real estate area of the market. Look at that breakout on Friday with momentum, a no sell candle there. You followed that by additional momentum there. Got a couple picks on the reports this week in the real estate space, but you do got to like that type of momentum you're seeing. Real estate looking right there at not the most aggressive bullish sector in the defensive space. That would be the healthcare space. Look at the momentum in the healthcare space, breaking out of a high base there as well. And so the defensive area of the market is starting to cook a little bit with real estate, with healthcare as well. Utilities, Coach Greg tried everything he could last Thursday in the Value Thursday conversation with those 3 utility picks. Trying, but it's got a lot to fight up against. I do like the W formation, the rounding bottom that he was talking about last Thursday. But when you're looking at those defensive sectors, I mean, it's starting to cook in real estate. It's been cooking in healthcare as well. And then finally, staples, looking very similar to the right shoulder breakouts in finance, looking very similar to the right shoulder breakouts in the industrial space as well. You're looking at a market that wants to run here. It just needs that spark. Can earnings be that spark? Can earnings be that spark? Seeing some front-running behavior in the financial space. Do we see follow-through this week? That's the question I want answered.
Yeah, Gino, I mean, where you been playing lately in the from a sector perspective?
Yeah, so same as last week. I'm really liking what I call the trader sectors. The trader sectors are the growth stocks. That's the technology, discretionary, and communications. And we kind of made a joke of Greg over there wanting to trade utilities. The reason is like utilities and real estate. Yeah, they can be bullish. They can be on fire, but most of those stocks just don't have the big ATRs. They don't have the, the momentum that we want for big moves and breakouts. They're kind of value related, dividend related. They're not usually your big movers. So sometimes they're just not your favorites. But going into this week, I love when discretionary is in favor. Discretionary sector, XLY. I love that because there's some fun names to trade in there. And you'll see them on our stock and options report. They're big names. They're the ones that you shop. They're the ones that, you hear all the time. We were looking at discretionary. We had Dick's Sporting Goods, Lowe's, Home Depot, Darden. There's a lot of consumer-based stores and stuff in there. There's a lot of stuff in discretionary, and they move. Those stocks move. And same with technology. Technology is the biggest sector in the market. It's the mover. It's it's what is it now? It is, let me just double check. 27.5% of the market is the tech. But a little side note in there. This is my personal belief. You got to be careful the way the tech is balanced. It's really favoring Apple and Microsoft, but also number 4 and 5 spot in there is Visa and MasterCard in that sector. And with the banks coming up this week, yeah, they still move Visa and MasterCard. They still move those two. They are sensitive to financials, even though they're listed in the technology sector. So I'm going to look at how that moves and how. So when I see the next, Tuesday, Wednesday, I see the next few days, if technology is moved at all by Visa and MasterCard's move, I might have to discount that. Now that's getting really, I'm in there with a microscope. You know what I mean? Looking at the players, looking at where the strength is in the sector, what's actually moving the sector, who's the star players. And with that said, you got to be selective as a trader. The growth, technology, discretionary, and communications. Communications has some fun players in there too. That's another big growth sector. We were looking at some big names in there: Comcast, Disney, Facebook, Google, Twitter. All fun to play. All really good setups. Most of them.
Yeah, and we're gonna talk Disney and stock talk coming up here in a few minutes. Any final thoughts on sectors, Gino and Matt, before we transition?
Based on final thought on sectors, based on what you're seeing technically in the sectors, the market does feel like feels like it's stabilizing following recent spats and volatility.
Correct.
Yeah,
That's
and
exactly
there's
what it feels like.
definitely. We can't say enough, Mark.
And that's what I mean. When the market wants to do something, it tends to do it unless something
Right.
forces it otherwise. So this whole bond yields cooperate, stabilize, whether they go up and down, just not any dramatic.
But it's definitely more bullish setups than there are bears. Definitely. We had a hard time looking for bears.
I know, but like, you guys ever get the feeling of the calm before the storm? Like, I have the opposite feeling here.
Yeah, there are.
We've had some storms in recent technicals in the market, but they do feel like they're stabilizing a little bit.
So what would the opposite of the calm before the storm be?
The calm before the
Just
calm.
the calm.
The calm before the calm.
It's a sunny day. Let's go to the beach.
That's right. Listen, wake me up when the volatility comes. When there's a cloud on the horizon and I can see something over the ridge. Yeah.
Maybe I should go look at the Weather Channel. I don't.
All right,
Weather Channel viewership is up big year over year. So.
Let's transition into commodities then real quick. Let's go to oil first of all. I mean, battles of resistance always fascinate me. You know, we've been talking about this resistance level the last couple of weeks. Resistance is resistance for a reason, and this is a major historic one coming up to a peak after a big run. What are you seeing on the chart, Matt?
You're battling, and you've been battling now for a couple weeks against that resistance level, and there's absolutely no trade here until you stabilize and break out.
So we had the calm before the calm. This is the battle before the battle.
This is just a battle. This is just a battle.
You know,
you don't get a pick when the battle's over.
Fascinating to me right now because you have a little volatility from a news perspective with the OPEC stuff, but you still got all of the banks and everyone pushing higher oil prices. You know, it's an interesting, but the nice thing about technical analysis is as this big storylines play out, I mean, technical analysis is a reason. I mean, I want to pull plays on BP right now. I want to do plays on Exxon right now. But as from sector standpoint, that chart's weak on XLE, isn't it, Matt?
Well, and it's been downgraded. Obviously, money's flowing out of that, especially as the market attaches itself to more of a consistent growth storyline. So, it's I certainly don't want to say, well, energy had its day, because I still believe in the energy argument over the course of the next 6 months. But the reality is this: I know there's drama happening at OPEC. Totally understand that. I know there's every bank out there in America saying oil is going to be at $100 because once one bank does it, every other bank has to do it. It's not even part of the analysis any longer. It's just like, oh, some random person at JP Morgan did it. Well, now some random person at Citibank is going to do it, which means some random person at Morgan Stanley. And so I literally could care less about what anybody at those banks say about whatever random price target, because we know at this point they literally make them up. They literally make them up. And then it's just herd mentality takes over after that. What I care about is the technical setup. You cannot get to every one of their price targets, which are all around $90 to $110. You cannot get to those unless you navigate the 75 to 77 barrier first. You have to navigate that first. So whether the banks are right or not, they're never going to be held accountable to their predictions. But if they are going to be proven right, you got to clear out of this zone first and foremost. And the simple reality is, you look at this weekly chart here, and you're seeing a market that's had very good price appreciation over the course of the last 3, 4, 5 months. You're seeing a market that's went from 55.5 all the way up to 76. You're talking about a market, oil, that's went from $50 year to date all the way to 77. That is massive price appreciation when you're actually talking about the world #1 commodity out there. It shouldn't surprise anybody if this battle takes a little bit of time to shake out.
No, and sometimes at resistance, price can get slapped down. It takes a while. Resistance battles are fascinating.
Yeah, they are. But they don't break until they break. So
I've been really trading geeking out lately, looking at charts, just being a total geek. Like, I love it though. We'll see. We'll see. Let's go over to gold real quick. Gold over the last couple weeks, yields come down, gold goes up. It seems like there's been that general correlation for a bit. A little bit of short-term technical strength, but we didn't move gold on the rankings at tackle. Why not, Matt?
because it's got a big old battle between 18 and 1820 and 1850. Don't get me wrong. I've said this for the last week and a half. I like the 1800 zone. I like it. It's just that I don't like the chop between that 1800 zone and these moving averages right around the 1830 zone. For me, it starts to get a lot more clear once you start to get above these moving averages and you start to get above this pivot right here at 1845. That's why I said I like the 1800. I like the moving averages rotating over. And you know what else I like, since we're on gold here? I like the consistency of this intraday chart. I like this a lot, actually.
Just
Look
like
at
the
that.
general stability and the meandering.
Well,
and
I just like consistency. I just, in
down,
everything
breaks
in
out.
life, I like consistency. In every aspect of life, I like consistency. And when you look at that, look at the resistance level form over here. Okay, top shelf there. So you got 1788 to 1796. Once you broke out of that, where did support form? The same levels, the exact same levels. So I like that. So I like the 1800 zone. I like the intraday analysis. It's a product that obviously we at Tackle Trading have appreciation for, but that doesn't change the simple reality that there is a tremendous amount of chop from 1820 all the way up to about 1845, 1850. And so that's why we didn't upgrade it.
Let's go over to Bitcoin next.
Just got mixed data is all, Chuck.
Let's go to Bitcoin next. Still in the box. Still in the box. It was up 1% over the weekend, down a little bit in action today. Still in the box. Tim, are you obsessing about Bitcoin?
Not even in the slightest. No. I've said this many times.
I wanted to see if you had anything pithy to say.
No, nothing pithy yet. Although I do, now I got to go look up the word pithy. I'm learning so many things this weekend, Mark. It's a great opportunity for you to remind me of a word I don't know the exact definition of. I'll go look it up after the show. 29,000, 41,000, nothing to see here. I got a slight, very, very subtle lean on the bear side, but I'm talking neutral too, just a hair leaning that way, just because of a little bit moving average congestion. First healthy thing that would happen for Bitcoin, in my personal opinion, is a break of that 36,000 intraday level. But even if it does that, wake me up at 41K. That would be something short-term traders would get a little bit more excited about than I would with Bitcoin. Ethereum actually has been performing a little bit better, recently, by the way. But even there, I'm seeing, and give me ETH for just one here. It had come up off of the lows, but still in the middle of a messy range. In fact, now that I look at that chart this morning, it's not even as good as I was looking at it over the weekend. So no, not excited about Bitcoin right now. Wake me up. In fact, who would have thunk it, one of my favorite ways to say that Bitcoin would become the boring product in the market the last 2 months?
Well, I saw a note over the weekend that trading volume in June at exchanges was down about 40%. People taking the summer off. So volume way down as a result of price action. Summer, probably a bunch of variables, right? But trading volume's down on Bitcoin. Are all the crypto guys and gals taking the summer off?
That's an interesting. I don't think Bitcoin takes time off just because it's any season. I think that
Bitcoin doesn't have a calendar season.
No. That's an interesting thought. Maybe summertime, lower volume. That's traditional thinking. I don't know. I wouldn't correlate that yet. I think that's jumping to a conclusion. I'm very interested to see what Bitcoin does after it breaks this range. Until it breaks this range, I'm keeping it in the box. That's it.
I get it that we're all like, hey, it's calming down. It's the summer. It's taking a vacation, and yet it still trades at 10% every day.
Yeah. So you're thinking good cover call play, Tim? Is that what you're thinking?
No.
In fact, the opposite, whatever the opposite of that is. But no, my point is, yes, trading volume is down. Volatility is not yet.
It's still Bitcoin.
It's still Bitcoin, yes.
Yeah.
Not a lot else going on in the world of commodities. We are seeing platinum and palladium have a little overperformance today versus silver and other metals. They're, especially palladium has had a nice little run recently, setting up nice day to day, setting up for a nice potential trigger. Platinum, the same thing, nice day to day. both either threatening to break or breaking short-term resistance levels. Nice rebounds off those Fed 3 weeks ago. That was a million years ago, those lows. All right, let's get into stock talk. Tim, what do you got for us?
Not a lot. There's a couple of stories that grabbed my attention. The one's grabbed everybody's attention, not even just in the financial media, but also the regular news media, is Virgin Galactic, Matt, SPCE. I got 3 stories I want to cover today from a stock perspective.
Is one of them Disney?
One of them is Disney, and one of them as well is DD Global. Who knew I'd cover DD Global 3 times in a week? It's actually going to be a real quick one, just as a reminder that Chinese regulators don't mess around. But Virgin Galactic, over the weekend, Richard Branson did take space flight. You probably saw the videos or the images across media or social media. Very popular story over the weekend, even from a stock perspective, caught the attention of the marketplaces. But from the market perspective, here's the news. They also came out and issued new shares. They want to sell a bunch of more shares so that they can, finance some of these future projects. This feels like a huge marketing ploy. This first launch to space that it was, and quite frankly, I understand why Virgin Galactic would want to get $500 million in stock
I got a
sales,
quote
because
from
they haven't
Richard
really made any money.
Branson. This is an exact quote from Richard Branson on issuing new shares. We've just got to build a lot of spaceships.
All right. This is a complete stay away from me from any trade perspective.
We just got to build a lot of spaceships.
Got to build a lot of spaceships.
All right. We all saw the infomercial.
Yep, that's what it was. Big commercial for the company. They are going to now drum up $500 million in revenue by issuing common stock. Interesting human interest story, not one for me from a stock perspective. Anybody else have a interest in the stock side of it?
I do, but not at these price levels up here. But that's pretty typical.
Interesting, Tim. I talk to a lot of traders, option traders mostly, and I read a lot of newsletters out there. One of the biggest covered call naked put screeners that popped up was SPCE, and honestly, it was a great naked put return on your money. But just as a side note, not just this one, but anytime you see implied volatility on your options over 100%, you want to stay away from that. You probably win if you're out of the money. If you want to be assigned, great. But nothing should be priced to move over 100% of its value.
Well, can I be blunt? Matt, is this the kind of Monday I can be blunt?
You're not the host role. You're in the analyst role. You can be blunt.
I'm asking Matt. He knows where my head's at. So
you were going to make the same comment I was, so go ahead.
Listen, when your founder and CEO, 70-year-old famous entrepreneur Richard Branson gets in a spacecraft and goes to space, you're pricing in the fact that he might not come back over the weekend.
Yeah, that's what the whole thing was, is will he make it?
Right. So it's the options market was pricing in the ultimate risk of this whole thing. Now that it's kind of subsided, I don't see any trade here personally, but I'm sure there are very advanced option traders that could find something that they could do something with. I would prefer simple trades.
Newsflash. Very advanced option traders find an edge on any stock.
That's right. Right.
Yeah. Doesn't mean they should spend that time trying to find the edge on this stock, though.
Yes.
This is randomness. It's volatile. And if anybody's got an edge on it, good luck to you, because I don't see it.
Tim, is that the king's bed that collapsed?
That is absolutely not the king's bed that's collapsed.
No, that is not. That is not.
Well, Tim, if you had to pick between Bitcoin or this one, what would you do?
Coinbase in a market.
Yeah.
Not
you didn't even have to think, right? You didn't even have to think on that.
What are we talking about?
More constructed chart. Moving on to the next story. Not a lot more on that space story. Obviously, he did come back safely.
Honestly, though, it's a cool story.
Mm-hmm.
It's a cool story. It's a less cool story that we had to deal with now, an infomercial and a stock sell following it. And don't get me wrong, I get the fact that Richard Branson needs the money, but do you need the money that much that you have to go beg after this? Let this story play out. Let the momentum build. I thought it was cold water on a positive story, honestly.
Yeah. I think they could have done that.
They did not need the stock sell the Monday following this event. They could have let the momentum build and let the story carry through itself.
I agree.
But instead of letting demand build, they issued shares, and I just felt it was a mistake.
We just got to build a lot of spaceships, Matt.
Got to build a lot of
Yeah, and
spaceships.
it looked a hell of a lot like an airplane.
The question is, Matt, what price ticket would you pay to go on it?
Hey, all I know is right now I want to see
The real
Ben
question is, how
Affleck.
much would you have to pay me to get on that?
I want to see Ben Affleck, Liv Tyler before he gets on the spaceship. Aerosmith playing in the background, Armageddon movie. That's what I
just
want
to see you and Gina reprise those roles and sing to each other.
That would be glorious, actually. Next, let's move on to Disney if we can over the weekend. My wife and my kids went to this before we got on the road, actually. They went on Friday on the release. Black Widow, the first Marvel movie released in 2 years in theaters, came out. They did about $80 million in ticket sales in North America. This is part of that communications sector that Gina was talking about a little bit earlier. We don't normally get data on Disney Plus data, Matt. In fact, one of the open questions that you and I and many people have had here on the Halftime Report for about a year and a half is how well can they integrate that new model into releasing these big feature films? About 60 million extra in Disney Plus Premier Access rentals over the weekend with international debuts, all that kind of stuff. $215 million, pretty good debut. One of the bigger ones we've seen, obviously, since the pandemic.
So what they cash in on the actual sales numbers, the theater numbers?
80 million domestic, 60 mil on their platform.
Disney Plus.
Ching.
I think it was another 60 international.
Ching. Wait till they hit that $1 billion, because that's what Disney does, guys.
Mhm.
They just put out $1 billion movies.
No, Black Widow is going to do $1 billion between all its platforms.
That is amazing. And you know what? And again, we'll have to wait to see what those numbers work out over time. But I do think that is a positive thing for movies continually being released on Disney Plus as well. That's just ringing the cash register here, guys.
The Black Widow results, because movie theaters are an area that I religiously follow. For whatever reason, I just have a passion for them.
But you love movie theaters, and like you've been all over AMC and everything. Like, yeah,
I know. I mean, so like, I got, this is a massive story. It's a win-win for all parties. To do 80 domestic, 60 on the platform, it shows that both can thrive, not just survive, thrive in an environment. So your streamers, your platform plays, big win for them. Shows people are still going to the movies both here and worldwide. It's win-win
almost
story.
like consumers like choices.
Yeah.
Okay. Newsflash: consumers like choices.
They do.
You have the choice to take your family to the movie and enjoy that amazing experience. You have that choice. You have the choice to sit at home and look at your 100 quadrillion inch television in your living room with sound, surround sound, and all of that. Fantastic. Disney says thank you much for both. I love it. I think this is fantastic.
Master audio sound, because I so wanted to drop a sound clip right there that says, I got a big TV.
I got a big TV.
I got a big TV.
We're never doing that, by the way. Okay, but let's take a look. So the news is obviously positive. We can gush all day about the positive news coming out on Disney. I also want to gush a little bit on the technical response here. You are starting to see a little bit of fired off action coming into the Black Widow weekend. You got to like that momentum building over the last 2 days. You couple that with a little bit of double bottom analysis. But what really gets me excited is not the support move, but the price response as you're coming into multiple different resistance zones. Number one, we see the importance of that moving average right there, the 50-day moving average. Ding, 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 right? You see the importance right there. Look at it break out with authority. Is that South Park? Did I nail South Authority? Is that what that is?
That was such a
I keep getting told. I keep getting told I need to watch South Park, but I don't know it that much. So I was just going with it. But coming back, you broke out with some authority. Now I can't even say it, Jim. No, we're coming back to it. No, you broke out here. You see the momentum. See, I switched it. Momentum. You see the momentum on the breakout there. You got to like that. I also like this trend line coming down and you're violating out of that trend line as well. No sell day. You got to like that breakout there. You look at this from a multiple time frame perspective. We've talked about this a lot post-pandemic. You guys know how much I like failed reversal patterns that ultimately violate the right shoulder breakout. Look at this head and shoulders formation, guys. Left shoulder, head, it even slows its momentum. That's nice textbook slowing momentum against the weekly chart there. You come down, reform that neckline right there at about the 170 level. Left shoulder gets formed here. Look at that breakout of the right shoulder. Right shoulder gets formed there. Look at that breakout of the right shoulder. I like this from a multiple time frame perspective. Obviously, it's a company that a lot of people enjoy in Disney, but Disney looking technically solid here on the backs of what you, me, and a lot of other market participants see a very good weekend out of Disney with the Black Widow release.
Yeah,
Good-
I really
good job,
think
Disney.
there's something here. I mean, nothing is more epicenter to me than oil and Disney.
Are you name me a better stock that represents the ability to sit your butt at home and also go out to the movie?
And with
This is fantastic.
I think there's something here on Disney, and I think both from a cash flow and a directional. This is one that there's something here, and this feels like a potential lift. I mean, we see it on the chart, but it also, on a deeper level, feels like there's a lift-off moment here with
because
this
it's this, Mark.
results.
When you look at Netflix and you see the power of Netflix, it is a pure streaming power, right? That's what it is. When you talk about AMC and Cinemark and the economic reopening up theme, and you get excited for people going back to the theater, but that takes away from the streaming argument of the Netflixes of the world. When you look at Amazon Prime, same thing. When you look at Paramount, when you look at HBO, when you look at all of those titles, streaming, Disney is sitting here saying, we got the streaming, we got the economic reopening, we're going to take our movies here, we're going to take them there, we're going to take them everywhere. And that's the feeling I think you're getting, is Disney's figuring out that riddle. Can we capture the same type of content?
This is my Queen's Court pick tomorrow. I call it
multiple. You can't steal mine. From multiple different industry angles. That's what you're seeing. Now, again, I'm gushing, but again, Disney should be gushed over a little bit here today.
Yeah,
Great
I think
weekend,
absolutely.
technically good.
No, I mean, and it's one of those situations. I mean, because we're dealing with a weird, but basically it's not really a classic consolidation pattern, but it is 6, 7, 8 months of sideways price action.
Mm-hmm.
And I mean, it almost just lines up perfectly for me, where you get this long low in a good company coming off the bottoms, double bottom or the support zone, whatever you want to call it, get a technical catalyst and get a real catalyst backing it up. Checks all the boxes for me. It's just, how do I want to play it now?
For me as well. And obviously, you do have an earnings coming up, but that's a distance away. I usually talk about Disney from a position to an investor perspective.
Yeah, no, that's
because that's what this stock is, right? Not just the way we approach it, it's the way a lot of people approach it. But this is one of those moments where I do think you do the combo fundamental economic analysis, and you couple that with a market that's heating up a little bit. Man, it's position time in Disney.
Yeah, no, it just feels like it's you just get a big trigger and you need to focus on it.
Let me put it like this. If you were covering Disney, you're probably opening up that risk graph following this weekend.
Yeah, this is and this is always where it makes my brain, because as a primary cash flow guy, there's the 20 weekly overhead. So by rule, I mean cash flow situations. Because does
that rule take into account Black Widow?
Because
Black Widow would break through that.
Because that's the thing, is that we all know technicals are amazing, but technicals are prone to volatility, and volatility just isn't on the way down. I mean, we've seen a lot of examples of volatility pushing up, and so you got a catalyst moment. it just feels like it's a trigger pulling moment from a position standpoint. It just feels that way.
Again, you got the coupled analysis with the fundamentals and the obviously success of Black Widow, but technically there, I remove the news. Technically, you love that breakout following that range.
Yeah, momentum, sector, trend, technicals, you name it. I think Disney's lining up for something here. All right.
So you said you had a third news story, Tim.
Yeah, it's simple. One sentence. DD, if you ever need a reminder to not ignore, not DuPont, you may not want to bring up DIDI, that new Chinese
yeah, I was going to say
firm.
DD. I was like, dude, DuPont didn't do anything against the Chinese regulators.
We nailed this story last week. We actually were the ones who kind of actually hit the underlying tone of the story correct from the get-go. They ignored Chinese regulators when they listed in the U.S. Now Chinese regulators, and this is going to be any government that will do this forever to any company out there. Here's your warning. Don't ignore the regulators. Chinese regulators are now coming out with stricter restrictions for all companies, not just DD. DD, you didn't just ruin your own party. Now you're affecting other companies, Tencent Music, ByteDance. They're all going to be affected on how they publicly list moving forward. A little bit tighter restrictions.
So a week ago, all the news organizations were reporting that this was a major increase in Chinese regulations. Taco Trading comes out, says that's not very intelligent. This is simply a Chinese company not following regulations. Are the news media going to,
are they going to retract
announce
that?
corrections?
I don't think so, bro. No,
Okay.
not on this one. But just another reminder: do not bypass.
My goodness! I don't think there's anything
regulation.
worse in America than opinionated news.
I look forward to the triple bottom that forms on this at $4.
I don't.
Yeah. I don't.
Somebody else might. Maybe it'll be there eventually. That's it, Marky. That's it from a news perspective today, and that's all I got.
Listen. I was told to get out of here in an hour and 15 minutes, and that is what I'm going to do. Listen, there's a lot going on this week. Of course, my brothers are going to go golfing and take some family time on a busy week, leaving me here. I don't know if that's a coincidence. Is that a coincidence? Or is that just the way it worked out?
I'm not saying it. There was a lot of thought process that went into that. We just said we wanted to golf.
All I know is I love it. We'll be with you all week. We got reports and earnings and pal. We're going to have a lot of fun. We're going to have a lot of Greg and Emily and Tyler, and we'll bring on Frank on Friday. It's going to be a real fun week.
Just don't burn the house down while we're gone.
Back on Disney real quick. Yeah. Jonathan has a question, and Jonathan, we're not going to go a long answer here. This would be a great one for Jedi options later in the week, maybe. Call counters versus call diagonal on Disney for position trade.
I like that question.
It's a great question. I would call diagonal it, Jonathan.
I would too.
The simple answer. Why?
You
get more delta.
Mm-hmm. Yep. When in that little conversation we have in our head between those types of cash flow strategies, the diagonal versus the true calendar, do you have a directional edge? If you have a directional edge, go to the diagonal. That's what I think, Tim, that's what you and I have here. I think that's what Mark has as well. That gives you a little directional component to it. So I would lean towards the diagonal there.
And by the way,
that's a great Jedi options breakdown too.
And I think a call diagonal is a great way to play Disney here, Jonathan, potentially because of the nature of having theta opportunity, the way Disney trades, as well as getting delta, a little balance in there could be a good strategy approach to Disney. So I love the question there, my man.
Now I just want structured trades.
Yeah,
I know, right?
Maybe we'll talk about that.
Jonathan, look what you did, Jonathan.
Yeah, you're piquing our interest.
I know, because John, the first thing when we're talking, I was like, all right, the 170 naked put above support, positive catalyst, and I'm like, no, you're selling yourself short here, Mark. If that's where you go, wouldn't mind owning Disney there, but you're selling yourself short. There's stuff to break down.
There's a lot of ways to play Disney. I think the purist is just stock here.
Yeah, I think
frankly. So. No, there's some creative cash flow strategies that I do think that is a wonderful topic for Jedi options. I love that conversation.
I do. I like it too. And you can't forget, this isn't a short-term play because, as I've said many times before, Disney fights Amazon in the war of 2332. So this is a long-term investment.
We're all fighting that war in 2072. Let's go.
Got to buy a lot of spaceships. Final thoughts, Matt. What are your final thoughts?
I'm picking Disney for the Great War of 2032.
2332.
And on the
picking
other
it for
side
that
of
too.
that, here's my final thought. By the time we get to 2342, there will be no more conflict. Disney and Amazon will just be copacetic. We'll all be happy, singing Kumbaya in
Who
the
owns the
rain.
Star Trek
Come on.
franchise? That's who I'm betting on.
That's a very pithy statement, Tim. Hey, Tim, we got a sale finishing up at tackletrading.com. We do 2 big sales during the year, Christmas and then Independence Day. Just talk for a few seconds.
Oh,
You
no,
bet.
I'm really excited for Mark to pitch.
Well, Marky does a good job of it. And I'll make this real simple and real direct to you guys out there. We love our community. We do. And we put on a pretty good discount each and every year at this time of the year. We call it our summer sale. It's around Independence Day. Today happens to be the last day you can get the discount. If you're a part of our community at the pro level, you're paying a monthly. You can get annual pro, for the full year, and you can get a 23% discount. We're now offering coaching for the very first time in Tackle Trading's history. So you can set up for a consultation in the coaching program, talk to one of our coaches and see if it's the right fit for you. And then all of the systems, that you hear us talk about each and every week, all the time, cash flow condors, bear market survival guide, those things, they're 50% off. I'll drop the link one more time. You guys know all about Tackle Trading. You can go through it. If you're interested, sign up, or if you have questions, email Mark at team@tackletrading.com.
Programming note, Coach Emily has her Dynasty Investors Trading Lab this evening, 8:30 Eastern. We also have Coach Frank doing onboarding, as he always does. Masterful job. If you're new to Tackle Trading, we have more and more things going on every week, it seems, at Tackle Trading. If you want to learn what Tackle Trading is all about and how to use the tools, Coach Frank does a marvelous job here on our YouTube channel, open to all. Does that at 7 p.m. Eastern. Plus, he's just probably the nicest guy we have at Tackle Trading. No offense to all people here. Frank's a nice guy.
Everybody loves Breakout Frank, no doubt about it. All right, guys, good job. Appreciate everybody out there.
Listen, you ain't in charge. You don't get to say the final statement. Good job, everybody. Thank you to all of you out there. Love you all. If you have any questions at all, you can always email us at team@tackletrading. We'd be happy to help.